Hey everyone, welcome back to Corporate Decoder, the place where we dive into the nitty-gritty of corporate filings. And today we're going to decode a report from Ingredion Incorporated, and let's just say their latest financial update might be serving up some surprise ingredients. We're looking at their current report, essentially a snapshot of what's happening with the company right now. And the main reason for this filing is to announce their second quarter financial results for the period ending June 30th. Ingredion is a big player in the food ingredient industry. Think sweeteners, starches, and plant-based proteins that go into a huge variety of products we eat every day. They're essentially behind the scenes, making our food taste better, last longer, and even making it healthier. Their stock trades on the New York Stock Exchange under the ticker symbol INGR. So when we talk about their financial results, we're talking about the performance of this company that touches so many aspects of our food supply. The core of this report is the announcement of their financial results for the second quarter of 2025. This is where the real story unfolds. Companies file these reports to keep investors and the public informed about how they're doing financially. This filing is essentially pointing us to their official press release that details those second quarter results. It's like the company saying, hey, here's the headline news about our performance. They also mentioned they'll be having a conference call to discuss these results further. That's usually a good place to get more color and context directly from the management. Now let's get to the juicy part, the financial numbers. While this specific filing doesn't contain the full detailed financial tables within the 8K itself, it directs us to the press release, which is Exhibit 99, and that's where the numbers live. Since we don't have the direct financial tables here in this specific snippet, we'll look at what the press release would typically contain for an update like this. Usually companies will report key figures like revenue, earnings per share, and profit margins. Imagine Ingredion's business as a giant kitchen. Revenue is how much flour, sugar, and other ingredients they've sold to all their bakeries and restaurants. Earnings per share, that's like how much profit is left over for each slice of bread or cake after all the costs of running the kitchen are paid. When companies announce quarterly results, investors are looking for growth. Are they selling more ingredients than last quarter? Are they making more profit on those sales? They're also comparing these results to what analysts expected. If they beat expectations, it's usually good news. If they miss them, it can signal trouble. For Ingredion, a key aspect to watch would be their performance across different product lines. Are there specialty ingredients which usually have higher profit margins growing faster than their more basic starches, for example? That would indicate they're successfully moving up the value chain. Also, you'd want to see how their international operations are faring. Are they gaining market share in emerging economies or facing headwinds? The press release would typically highlight any significant changes or trends. Perhaps there was a successful new product launch that boosted sales, or maybe rising raw material costs squeezed their profits. For instance, if a key ingredient like corn increased sharply in price, they might have had to pass that cost on to customers, which could affect sales volume. We also need to consider the broader economic environment. Consumer spending habits can change ingredient demand. If people are cutting back on processed foods, for example, that could impact companies like Ingredion. And signing off on this report, we have James D. Gray, the Executive Vice President and Chief Financial Officer. His signature confirms that the company is presenting this information as accurately as they can under their legal obligations. Looking at Ingredion's position, they are a critical supplier to many food and beverage manufacturers. Their strength lies in their long-standing relationships and their expertise in transforming crops like corn into thousands of different ingredients. They invest heavily in innovation to create new ingredients that meet evolving consumer demands like sugar reduction and plant-based alternatives. However, a couple of potential risks could be significant volatility in agricultural commodity prices, which are their raw materials. Also, intense competition from other ingredient suppliers and a constant pressure from food manufacturers to lower costs could impact their profitability. They also face regulatory scrutiny concerning food safety and labeling. In terms of our outlook on Ingredion, based on typical quarterly reports like the one they've announced here, we'd be looking for sustained growth, particularly in their higher margin specialty ingredients. Any reported slowdown in these areas would be a concern. Conversely, strong performance in these segments coupled with effective cost management would be positive signals. We'd also want to see them adeptly navigating the changing landscape of food consumer preferences. So to wrap up, Ingredion's August 1st report is a crucial update on their second quarter performance. It gives us insight into how well they're managing their operations, supply chains, and innovations in the dynamic food ingredients market. Alright, that's our decoding of Ingredion's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.